Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Monday, June 24th. Well, we did get a little bit of a bounce on Friday, but the bounce was very, very weak. We did bounce a little bit in the afternoon session. I'm going to show you on the charts. I am expecting a little bit of follow through. However, the selling continues in the overnight session. Dow Jones futures down 116 points and the S&P is down 14. So the level really, we need to stabilize the low for today, establish its low, its local low, and then we'll see where we go from there and run some Fibonacci retracements. I did run a fib number off of Friday's low, but that's going to change. I just want to show you, get a general idea where I'm looking to short the market. We do not want to be short in a hole here. We had three quick drops, gap down days, which is very difficult to get short. Risk-wise, it's not worth it unless you're obviously day trading, and you can find a good setup to let a stock let you in on the short side. But obviously, risk is too high to be short down here. We can get and will get a rip your face off rally, and I mean that literally. It's you'll see when the market starts to change trends and change hands to now trending lower. You do get these violent retracements back up. So that's why we want to wait and be patient here. There's going to be plenty of opportunity. I've mentioned for many months, I said, look out for, there's going to be one catalyst, and that catalyst is going to be Ben Bernanke speaking hawkish, and everything else is going to start to break down aside. Now you're hearing China speaking that they have their cash squeeze, and their economy's not chugging along like we anticipated. Europe's got issues, and now we have a lot of geopolitical events that are happening. So just be nimble, and remember, patience is key in this market because there's a lot of money to be made, especially when volatility starts to pick up. Now, I want to get into the charts. I have a lot of stuff to show you, some indicators, but I want to just get right to it. Now, I do think that we are going to get a bounce here. A lot of the indicators are reading oversold. Again, not a sell signal, not a buy signal, on the oversold, not a buy signal to looking to get long at the moment, but you want to be aware of where things may be headed, because things start to move really fast and it can leave you behind, especially a risk-off type trade. As you see, 3 days and we gap down every single day, and if you weren't short going into the day, you kind of lost the opportunity. But again, that means you have to take on a lot more risk. But anyway, let's get into the 9 McClellan oscillator. As you can see, continuing to read oversold. We're probably going to dip back down into the 85 area here this morning and then see where we stabilize. But that's something that I'm going to be watching as well. I want to show you the interesting too, the new high, new low. We actually finally broke below this and closed below it. So this is not a good reading. But again, we're a little bit oversold. So this is telling me that we probably will get a little bit of a bounce before we start to roll over again. And again, we could get another day or so of follow through, but nonetheless, let's just keep an eye and be aware that we may be getting a bounce. And that means that doesn't mean you can't buy the market, especially if you're day trading. But if you're holding positions, there's no reason to add to your positions now. Again, I'm a big advocate of buying protection. I would have been buying puts if I had a big portfolio that I was holding. I would definitely be buying puts according to your size of the portfolio, because at the time it was very cheap. Now the premiums are high. It doesn't make sense to. So now you have to look for a spot to be adding into your position. Okay, so here's a new high, new low, but again, we broke that zero line. So if we continue to stay below zero at a chunk for 4 or 5 days a week, that's going to tell us that the trend change has shifted to the downside, and now all of the indicators will probably follow suit as well. But let's take a look at the bullish percent SPX. As I mentioned the other day, that we did get a sell signal here, and we did get a buy signal here, and then we just chopped around. That was pretty much chopped, and now we're back down to the 73 percentile area. So maybe a little bit lower, and then probably look for some sort of a higher low off of the November lows. Take a look at the NASI weekly. This has been on a sell signal for 3 weeks. We get the 1-2 weeks confirmation. So now we have another 2 weeks here that this is on a sell signal. Great indicator, and I recommend that you definitely look at this if it gives you great ideas of local tops and bottoms here and here, as I can show you. Sometimes you get a little whipsaw here, but well makes up for any losses that you take if you're following this indicator. But again, nothing is foolproof, but you know, probability, if you look at it, you could just point out, pause the video, and you can see, wow, this is true. Look, this is on a weekly though. Remember though, guys, this is weekly, so you can still get chop up and down during the middle of the week. But if you just stick to your pattern, more than likely you'll see this really plays out a lot. Okay, so that's a NASDAQ. Take a look at the New York Stock Exchange weekly. Same thing here. As you can see here, this has been on a sell signal for 3 weeks. So New York Stock Exchange a little more weaker, but again, look at this, oversold. So I'll be looking for some sort of a turn up and a bounce, and they probably might get it this week too, because we do have end of month. You usually get a little bit of window dressing as well. So if at all anything, you might get maybe some selling today, tomorrow, and then I think we start looking for a little bit of a dead cat bounce going into the end of the week, and then we would reevaluate it next week. Take out the new lows. Now this is also telling me that we might be due for a bounce. Look at this. Every time you get a spike, now this is the largest spike since, oh my gosh, this is this is almost a year. This is pretty amazing. Actually, it is a year. This is the biggest spike in almost a year. Yep, you know, because we're still in June actually, but call it a year. As you can see here, but once you get these big spikes, you usually get a little bit of a that usually indicates a buy signal. So this is what I'm saying. Look out. Don't be looking to short here. Don't lose your patience. That the market will give you plenty of time to reshort this market. So here you go. This is a little indicator telling me that we might be looking for a little bit of a bounce. Take a look at the end of the day tick. Again, not much, but it did break that zero line. And if we continue to break down and start hold that zero line, this is telling me that the market breadth and internals are actually weakening as this market starts to move higher. Now, if it does break up higher, then it's fine, but we just need to see some of these, we need to track some of these indicators. S&P stocks above the 50-day moving average totally just dumped down 38%. I'd like to see it get a little bit lower down here where I can start looking for entries to get long for a dead cat bounce. But again, guys, I think you get a little weakness into July, maybe into some choppy sideways trading after following the weakness, maybe a little grind up and then sell off again, and then pick up where we left off in September, October. So here's the S&P for the stocks above the 200-day moving average. As you can see here, same thing. We just broke down here from this way overbought reading all of 2013. Okay, now I wanted to show you copper. And as you can see here, copper actually rebounded on Friday, as the market did as well. But we'll see what happens. I think copper is, copper is down in the pre-market. So we'll just see where this thing stabilizes. Here's the weekly chart of copper. And copper, same thing, down here at the $3 area. It is a weekly. Now, if it breaks this area here, you can see, here's this little area. There's a weekly chart. You got this little support area 3. Below that, you're going to get 270 right around here, 270, 280. And then you're going to probably look for 250-ish area. And then who knows below that. But again, not looking too good. And that's selling off again because of China. Not really looking... right now for the moment to any type of rally. Okay, so let's get into these. Let's get rid of these things, and I want to show you some of the charts here. Okay. All right. So now here is the S&P SPDRs, and these are levels I'm going to be looking for. Now this is going to change because we have our low put in place at 157.24. Now we're lower than that now in the pre-market, so we're going to redo our fib numbers, but just want to show you for discussion. The 50% comes in at 163.28. I like to really get, oh, excuse me, actually, you know what, let me remove that. I wanted to show you the other way. Sorry about that. Go from low to high, and we're right about here. So the 50% comes in somewhere around 164.20. The 61.8% is 164.69. That's really ideal. I'd love to get into a short position right up in this area. But if you take this away, just to get rid of this for a moment. So we're right above here. But anywhere back into this line, this downtrend line here, which coincides nicely with a 61.8% retracement, I'd like to get short this area, short this market right up in here, let it fill the gap. I would love to let it stop here at the 20-day, but wherever this market pauses and reverses and gives me a reversal candle with a nice top and tail like this, the next day, and this will be on a closing basis. Okay, the next morning I would be looking for any bounces to short. Okay, so this is going to be my entry area here to look to short. Now again, can it fail? Absolutely. Can we go run up to the high short? I mean, not that I think it's going to happen, but I'm just assuming that the market's going to run in, get a little bit of a dead cat bounce, and then start to break down from there. And if that does happen, we will look to re-enter short at these levels. These are the areas that I'm looking for. Okay. Here is the XLF. Just want to show you where the banks are. Clearly a downtrend. The XLF has held this long-term uptrend line here. So far, it's holding up better, but we've had technical damage now definitely throughout all of our markets, a lot of our asset classes, gold, crude oil, and of course equities. Even a lot of commodity stocks are getting crushed because of the China news that's been coming out as well. So you broke the 20, broke the 50, and now we're down here at this trend line. Hit it to the penny. So anywhere a break back up, we're going to see if these banks are going to be able to hold. Banks are holding up better than most banks are holding up better than a lot of the certain asset classes and certain sectors in equities. So let's take a look at their IWMs. Same thing now. The next test is going to be these uptrend lines from November on a lot of these, excuse me, a lot of these ETFs that we follow, and a lot of sectors that we follow. So again, we need to really really start to break out. But I think right up in here at 97.80, 98, that IWMs would actually be a real good short. But again, believe it or not, it's funny how it seems the IWMs look actually a little bit better, holding up at least better than the other sectors. And let's take a look at the IYT, which is the transportation sector. We had that head and shoulders pattern. The neckline was right here. We broke right down, and now we back tested that neckline here, and then we failed. And as you can see, this is real, and this is a clean. What I did was I just wanted to clean the whole chart up and not to show, just want to show price and the Bollinger Bands. Oh, by the way, I did mention that a lot of these sectors are outside of the Bollinger Band, so that also predicts to me that we are going to get some sort of bounce. Anytime when price comes out of the Bollinger Band, we usually get at least a dead cat bounce and create some sort of a flag pattern. So as you can see here, we're outside of the band. We were outside of the band here. We made a local low here in November. And then we closed outside the band here, and then look what happened. And same thing here. Say we get these retracements. Same thing for the upside. So these bands, Bollinger Bands that we're looking at, it's a good indicator to tell you how we're overbought or oversold in the real short term. So this is also telling me that we're looking for some sort of a dead cat bounce. Lastly is the Qs. As you can see, Qs also closed below. So we have the IWMs, we have the Russell, we have the Nasdaq, we have the Dow Jones. And then, of course, we have the Qs, and they're all closed out of the outside Bollinger Band. They've all held the uptrend line. Logical spot for a bounce. Remember that. That's why I do not want to look to get short the market at the moment, but I will be looking to short the market at those current levels that I indicated to you earlier in the video. Okay, guys, that's really about it. Be patient. Let the market come to you. What happens is, now that we're trading in like a sort of a worldwide market here, and a lot of trading is going on overnight in equities, what happens, markets gap lower, and if the markets don't have any more momentum, usually stalls and grinds higher, and then usually gets one little sell-off where there's lack of activity for a lot of the day traders, depending on what you're trading. So be patient, let the market come to you. It will come, and as you can see, we were picking up volatility, so it's only going to get better from here. All right, guys, have a great day. Be safe out there. Use your stops, and we'll speak to you tomorrow. Take care.